And welcome out to the halftime report presented by Tackle Trading. Coach Matt, Coach Tim, and producer and host Cody here with you. Matt, let's rock and roll here today. We've got a lot going on in the market. Beautiful pullback. Not a real high volatility day. I mean, we're down 0.24%, not real big movement there. But you got to like the pullback on the week. You know, traders always talk about how they wish there was a pullback. Well, guess what, guys? Here you are.
Here you are.
Yeah.
I mean, I remember saying this on Apple's breakout. If you can't buy Apple on a breakout, what are you doing? And that's kind of where I'm at here, Tim. I mean, we love retracements. We love stocks that support. And if you can't go out there and be aggressive in the market when the market's giving you your opportunity, then what are you doing?
I agree. Market's got tons of opportunity here today on both sides. We've been saying it's a stock pickers market for a while. You know what else it is? It's a labor department pickers market, I guess.
Labor Day. It's true
if,
Labor Day.
If you want a job, you pretty much can
one.
have one in this marketplace, Matt. Unemployment report came out today. We're going to get into that here in just a minute. You know, the S&P 500 has had 5 out of 6 red candles, hitting the 20-day moving average, old resistance, new support. Anybody who's reading this as a technician sees that as a beautiful opportunity. So what do you do on a Friday to prep that?
I'm going to go find 20 stocks and research those stocks and pick the best 7 or 8 that I'm going to drill on Monday or Tuesday.
Yeah. So you don't really push a lot of money into the market by the end of the day on a Friday.
No,
you're fading, you're on a red candle, you're getting ready for a Monday open, Tuesday confirmation, that kind of scenario. Is that right?
Yeah, obviously, right? So today we're looking at a market that's coming down, slowing down, coming into support. We'll talk about the unemployment labor numbers here in just 1 second, but this is exactly what you've been looking for. The only thing that kind of gives me pause here, and I talked a little bit about that yesterday, is the volume, the big increase on volume during this profit taking. But I'm still seeing this as profit taking, Tim. Even despite the fact that we do have an increase in volume on the pullback, I'm still seeing this more as profit taking, given that there's still a lot of concerns out there, and the market's been very, very bullish. And we had a great month coming out of last month, and September has some seasonality concerns. So, there is those concerns out there, but I'm still seeing this as a buying opportunity. I'm not aggressive in there today. I actually started locking in profit on bearish positions yesterday before the close, and with some of the stocks that were a little overextended on the buy side, I started locking in profit there as well. So I closed 7 or 8 positions yesterday before the close, Tim, in preparation to prepare for today to coming into the market on Monday. So today is one of those prep days for me coming into the market on Monday. And I think there's a tremendous amount of opportunity, Tim. I was running some scans earlier today, and I found 50, 60 stocks that were setting up for really good bullish retracements.
Sure. I mean, it's a take your pick market. There's no doubt about it. You got the big dogs like Apple and Amazon. You've got the middle size companies, which is it's kind of funny to think about a $50 billion company as mid-size, but the Salesforces and whatnot. But then you've got earning stocks as well. I like PanW breaking out. I know Avgo had, Broadcom had a really good earnings. We'll be talking about a bunch of these as we go through the market. The S&P on a pullback hitting the 20-period moving average, Matt. Let's compare that against the Dow. I think their charts have been most related for a long time, but the Dow kind of more of in a high base. Your retracement percentages has not been as deep. Now, if the market broke out, you could make the case for the Dow, but on a pullback, it seems like we're looking at other indexes that are better set up on pullbacks. Would you agree with that?
I just haven't loved the Dow. The Dow's been doing good, better this week from Tuesday, Wednesday, and Thursday. Showing some weakness today on trade concerns, though. So in looking at the Dow here, I'm still a little hesitant, although it was kind of showing some positive momentum, some relative strength against the indexes from Tuesday to Thursday. But I'm just a little shy on pulling the trigger on on the Dow, on the industrial index as a whole. I still think S&P and technology are where the better triggers are today.
Yeah, I would agree with that. Let's look at the NQ contract as well and talk about that, because I love tech. Tech has been the leader in the market for such a long time. And as you look at this, and those probability cones are throwing you off there a little bit, that's okay.
Yeah, in fact, let me take that off. It does it with silver. It usually doesn't do it with that, but there we go.
There you are. And
you get some time frame.
Yeah, we need kick little time over there on the right. There's no doubt about it. 42 days because there's 21 trading days in a month and you want 2 months?
Oh, well, I went 2 months, and then I know our pictures need need probably about 15 days to show your shiny little mug there.
All right. Pull back, pivot. We're in the bull zone, not the 20-day moving average. We're actually in between the 20 and the 50. Now, from a
It's a better
moving,
buy zone, by the way.
I actually like it more as well. You look at that historically, Matt, in this uptrend, it's come back there in June. It's come back there in late July, early August, as well as mid-August. We've hit this zone a few times and it's always had a nice little rally. Now, we don't know the future, but I know that, what a good setup looks like. And I know that's a buying opportunity.
Nobody knows the future, just like you wouldn't have known the future here, and just like you wouldn't have known the future here. And you know what, Tim, on this pullback and on this pullback, you're looking at the market and you're saying, well, everybody's losing money and run for the hills, and yet it went straight back up. So I'm taking that as the exact same thing is going to happen. And until that stops, I'm going to continue to hit it. So obviously, you never catch it. You never start being aggressive on a down day in the market, even though we are slowing its momentum. This is very positive for me, sitting at support in the bull zone. If I get confirmation on Monday, I'm going to get aggressive in the market.
I agree. Well, and when we say aggressive, that means adjusting your delta to where it's still within.
Yeah, that's exactly. I don't mean go out there and sell. Okay, here's what I don't mean. Go sell at the money put options to buy out of the money call options. That's not what I'm talking about, Tim. Okay,
well, that's the old slingshot trade.
That's the poor man's. That's the original. That's the original crystal trade. The poor man trade. Yeah, the crystal trade. But no, it's what I mean by is adjusting my delta to the point where I am. My ratio in my portfolio is more bullish than neutral. This week in the market, Tim, I've been carrying pretty much a neutral delta in the portfolio because and a lot of that was my positions I had on materials and on energy on the short side, right? I didn't really have anything on the tech side on the short side. So I'm looking at this from a buying opportunity. When I say mean aggressive, I mean switch my delta from neutral to +1 or +1 to +2.
Sure. And and you got to close down a few bearish positions here today as well, don't you think, Matt? Going into the weekend, obviously with the sell-off.
I closed down every single one of my short-term bearish positions today.
I don't know if I closed all of them, but I did close because I'm still in gold.
No, I'm out of gold too.
You're out of gold as well. But things
I'm looking to get in again. I just over the weekend I was kind of like the gold one. I was hesitant on. I was like everything else, energy I got out of, base materials got out of, but I was a little hesitant to keep the gold position on. But because and we might as well just look at gold very quickly here. But when I was looking at gold yesterday, Tim, it does, and I hate to say it again, but it's kind of got that feeling that it might want to take a few days, right? And so kind of my perspective is, and I did this yesterday, right? So my perspective was 1200 was holding a little bit tighter than I thought it would, right? Would you agree with that? 1200's held a little bit tighter than we thought it would.
Yes. Mm-hmm.
Okay.
It's anchoring to it. Yeah.
Yeah. So I felt like 1200 was holding a little bit tighter. And so for me, coming into the weekend, I just wanted to enjoy the weekend, not think about things. And if I do get a close underneath 1200 today with any downward movement on price on Monday, I will reopen the position. So I did close it, but with the intention of reopening if I get a better technical setup.
So much that is happening in the commodities market is also somewhat due to that international relationship between stocks, commodities, currency, and whatnot. If we're going to talk gold, we have to talk the dollar and take a look at that index, DXY here, Matt. Again, hanging around, wanting to break out. In my opinion, I've got that feeling like you're talking about that it does want the upside. No, don't do it.
That tonight's going to be, is that what the feeling is? Anyways, where's your breakout channel? That's what I'm struggling.
Hold on. I want you to run with that. See if you can remember.
No, that's all I know.
No, actually some better words would be that today's going to be a breakout.
All right.
I like it, Cody.
Cody, sometimes you come in and sometimes I like you shouldn't.
That's all right.
No, I kid. I'm totally kidding. But coming into the breakout here, Tim, obviously 95.5 is your breakout, right? I mean, that's got to be the level. But are you comfortable buying a breakout on the dollar above 95.5?
Yeah, I am. And I know
you're more bullish on the dollar than I am.
Well, To me, the fundamentals of one of the only currency systems that's actually raising rates aggressively right now, that is a fiat and dominant currency globally. We're the number one currency in the world. I am more bullish. And we've got the Fed meeting here later in the month, Matt. They're going to pop rates again.
Which obviously the unemployment report today gives them more leeway in raising those rates in the future, right? And guys, if you want to see how a marketplace really is embracing an economic report, it's the currency market.
Sure.
That's the market that is the one-to-one correlation. The stock market has all this nonsense of, oh, well, good news is bad news is good news, buy the hype, sell all that jazz, right? But the currency market is a one-to-one correlation between the economic value and the fundamental value and the currency value. So obviously, when looking at the dollar index here today, dollar's showing strength coming in out of that unemployment report. And I want to dive into that unemployment report since we're kind of talking about the dollar and the market here, Tim. Unemployment numbers, and let me just give you the numbers here. The unemployment rate was 3.9%.
Mm-hmm.
The participation rate, which is the amount of people in our economic system that are working in the market in any capacity, that dropped unexpectedly to 62.7%. The expectation was 62.9%. So, in overall, looking at the unemployment report, average work week 34.5%, participation rate 62.7%, really kind of par for the course with unemployment staying at 3.9%. The biggest benefit that I saw in the unemployment report, Tim, was an unexpected 0.4% increase in wage growth in August. And that gives us a year over year of 2.9% of wage growth, Tim. And 3% wage growth is really, really good in our economic system, best since we've had since March of 2008. So that was certainly a positive. The only negative I took out of the unemployment report this month, Tim, was the revisions from June and July reports. Both June, both July got revised downward pretty aggressively. So obviously those labor numbers were not, where they needed to be. So they got revised down quite dramatically. So good on wage growth, neutral on everything else, negative on the revisions to the downward. So overall, pretty neutral report here, but the dollar did respond fairly positive. And yesterday we were talking about this from an unemployment standpoint, and I just want to show you why this report is so widely followed, Tim. And I'm going to look at kind of, over the last couple of years. Okay, so here's 2002 to 2003. Unemployment starts to kind of, decrease. Let me get a little bit more time frame here. So here's 2000. Obviously, the crash coming down. Unemployment, as the market is going down, unemployment goes up. So here's 2000, 2001. Obviously, we know the market's coming down, and here's unemployment going up. And then as the market bottoms in 2002, 2003, the labor numbers start coming back down. In 2007, here we start to neutralize on the labor numbers. In late 2007, all of 2008, 2009, you see our labor numbers start to tick up until late in 2009, 2010, we top out. And then ever since then, as you can see, the unemployment, the labor numbers are getting better. What you're seeing right there, Tim, if we look at the S&P right here, what you're seeing is a 100% inverted chart against the S&P 500. So when I'm looking at this, and this is why this report is so important, ladies and gentlemen, because it's, you have your lagging indicators like RSI, MACD, stochastics, moving averages, all of those indicators we use. Economic reports are leading indicators, right? They lead the market. The market responds to them. And so, so just give me 1 second. Let me get 20 years of data here. Let's just go max available. Okay, so here, let's just start with the data we have in Forex Factory. Okay, so here in 2000, market tops out, market starts going down. As the market starts going down in this exact same time frame, the labor numbers go up. More people get laid off. You see 5% unemployment, 6% unemployment, 7%. And then as it gets to the bottom here in 02, 03, you start to see the market bottom out. Labor numbers are at its top. And all of a sudden, the market responds up. Labor numbers come down. You see that direct correlation. And so, for example, here in 09, when we started quantitative easing, our debt buying programs, all of those things that I am staunchly opposed to, you see the market go up and up and up. And as you can see, our labor numbers in that same time frame go down and down and down. So when looking at the unemployment number, Tim, it's a leading indicator that helps us understand the health of our economy. And when you are sitting at 3.9% unemployment, that is a really, really, really good number. And as long as that number stays positive, most likely I'm going to stay positive on the marketplace.
Employment is an interesting thing, though. I think if you dig into the report, you can always find nuances where you're like, that's amazing, and that's not very good, right? I know that where we're from, Matt, coal country, employment's not that strong. They probably have a low unemployment rate.
Well, Tim, the real unemployment number is around 15%. We know that. The unemployment number simply reflects the people that are the percentage of the labor market that is receiving unemployment benefits. A much higher percent of people that want a job cannot find a job for one reason or another in this hot marketplace. And it's usually just those types of people you talked about, Tim, the laborers out there, the coal miners out there who don't have this skill set to go get a tech job, right? Or whatnot. And they don't want to go work at McDonald's because they get more money on unemployment, then they just kind of go into that poverty type situation. So, obviously you can look for pros and negatives in every type of economic report. But for the most part, when you have average hourly earnings at 2.9% year over year, when you're dealing with a 3.9% unemployment rate, that's a good number for a marketplace that has been bullish, and I expect it to maintain bullish.
I agree.
Now, mind you, if I start seeing 4.0, 4.1, 4.2, then at that point, then I'm going to get concerned if we start to see those upticks. But as long as we stay underneath 4%, the labor market's healthy. Now, that's not the only thing that impacts the market, but go on.
I think at 3.9, getting back to my original premise, Matt, the Fed cannot stop their plan just because Trump is threatening Jerome Powell. There was all that.
Doesn't care about that.
He did come out and make that testimony in Jackson Hole a few weeks ago, which I think was affected somewhat by all the noise.
A little bit.
Maybe. I don't know that. That's just my opinion, but I did not expect him to be so soft on his tone at that speech. And that's why the dollar kind of went into a spin there for a few weeks.
You're right.
Here we are at 3.9% unemployment. The indicators all look strong for the economy. 4.2% GDP number. They've got to raise rates later in the month. We know they're going to do it. And they probably have to have a pretty strong tone in that message as well.
There's a 100% probability of them raising rates in September.
Don't say 100.
It is. It's 100. The only question I have is it 0.25 or is it 0.50? It's the only question I have. And obviously, I'm going to bet with the bettors of the market at 98% that it's going to be a 0.25%. So I certainly expect a 0.25% increase in September. I certainly expect a 0.25% increase in December. They're not going to do anything in late October, early November. So that's kind of my expectations. And Trump's got a little, let's just put it like this. Trump's got a few things to worry about other than Jerome Powell right now.
Let's start digging into the sectors here, Matt, breaking into the more nuanced parts of the economy. I was looking at a perf chart just today and looking at all the sector performance year to date. Strongest performing sector of the year is the cyclical sector, then technology. Actually, technology is 1% behind it. Healthcare is third. Utilities and the rest of them are all kind of mixed. Utilities is fourth, though. I know there's a lot of really interesting setups on the sectors. Walk us through the ones that you think are set up the best based on the current pullback.
Well, I'm looking at it from a buy side perspective, obviously, because of where the market is in relationship to support and resistance. There's four sectors that I am looking at here. And let me switch this back to a daily chart. Even though I'm a little hesitant on industrials, Tim, a breakout of 78, which is not going to happen today or Monday, mind you, but sometime next week, if you see the breakout of 78, that's going to pique my interest real big. So I would put XLI on a watch list. Here's what I would do if I was the trader. Well, here's what I am doing. Okay. I got a list of 4 or 5 industrial stocks that I like that I'm willing to trade, and I'm just waiting on the industrials to kind of break out of that 78 level. So if it does, I'm ready to rock and roll. XLK, we already talked about this from the NASDAQ perspective. I am loving this sector right now. It obviously gapped down in price here early in tonight. That was a lot of the overnight market action and whatnot, showing some positive momentum. This is not confirmation, however, Tim. confirmation must be a close above the previous day's high. This is what we call a bounce candle. The confirmation would be on Monday. So if we get confirmation on Monday, that is something I'm looking to get aggressive in. XLP, consumer staples. I'm still looking at this as a potential. However, I am seeing a little bit of a short-term head and shoulders formation, Tim, right here. You got your left shoulder, your head, your right shoulder at that same type of level. That's given me a little bit of pause of concern, but if it does get back above the shoulder at 54.5 on XLP, the staple sector, that could be something positive. And XLV here, Tim, healthcare has been so strong for so long, and it's kind of giving this little action it had right here, and I'm seeing a little bit of the same action right here. These are what we call high bases. We've talked about them a lot. The market runs, consolidates, runs, consolidates, runs, consolidates. A breakout of 93 would be significant on the healthcare sector. Those 4 sectors I'm looking at with the potential reversal on XLP.
Take a look at energy. You know, obviously with crude oil, we've been talking about the weakness in energy as well. And some of our bearish stances have been in materials and energy and some of those other types of positions. In my opinion, it's profit-taking time on any bearish energy type of stuff, right?
Agreed.
You know, and I still have a bear call in general, a bearish position, I should say.
Swing trades, trade. It's profit-taking for swing trades.
Yep. Yeah,
that's my read too, Tim. But this is not neutral yet. It's not bullish yet. At what point? Well, let's talk about 2 things here on energy, Tim, because I'm seeing the same thing in the emerging markets here. You know, looking at EEM, you know, kind of sitting right down here at those support levels. VEU, which is the all world index here, sitting right down there at those support levels. Coming back to XLE, we can have the exact same conversation on all 3 of these, Tim. So when the market is bearish and you are showing slowing momentum at your support level, right? You're still bearish, correct?
Yeah.
But at the same time, because of the weakness at support, you just want to lock in profits. So at what point do you get back to being aggressive on the bear side of the equation in EEM, VEU, or XLE? Because they're all showing the same stuff.
Well, I think I'd have to dig into the individual companies, obviously. For example, ExxonMobil still on a retracement, but actually went up today for whatever reason.
They had some potential $10 billion buyout of some company that was a rumor that isn't confirmed. That's all that it is.
So I think that you would have to break down and confirm more with momentum to the downside. I would have to have a retracement as a bear, by the way.
Say that again, T?
I would not want necessarily a retracement as a bear.
No, that changes the trend. Absolutely, that changes the trend.
Yeah.
So at that point, you're neutral. For me to get short, I got to break 72. It's got to go break 72 again.
That's where I'm at. I'm going to stay watching a lot of those companies bearish. I'm taking a few profits on swing trades on that here today.
You know, looking at really quickly, Tim, on EEM, this is something I've been bearish on this week. Obviously, talked about in the halftime report. I locked in profit yesterday, Tim, right here, just given the fact that it was slowing down coming into this level. And that's another thing that I'm looking at here is you know, and we talked about the correlation of the emerging markets the last time they did this in 2015, but the emerging markets went down about 20%, then responded very, very favorably, Tim. If you look at the emerging markets here, and let me get a little bit more time frame, let's just go 5 years here. Okay, the last time these things did this, we're talking about sometime in this time frame. You're looking at a market that goes from 44 to 28. Double bottoms, and then look what happened over the next little bit, Tim. I mean, you basically did a 100% increase in price, and I've seen this a lot in terms of the intermarket analysis behind the U.S. indexes versus the world indexes. I love the buying opportunity in the U.S. indexes right now, but if the U.S. indexes do turn neutral, Tim, I can promise you that the emerging markets will most likely respond bullish in that environment because you'll have money rotate into the emerging markets, into the all world index. So even though I'm still bearish on the emerging markets, I'm still bearish on the all world index too. I am looking at it as a potential buying opportunity off a reversal. And so what I would have to happen here for me to actually buy this would be a W formation, which won't happen for weeks, but I am looking at that in the future. I'm still bearish as of now. If we break support, I'm going to enter into more short positions. Okay, I'm completely out right now, but I am looking at that slowing momentum. It's giving me a little bit pause for concern, and maybe we're going to start to see a little bit of money flow back into the emerging markets here, short term.
More clarity on this stuff with tariffs with China obviously is going to help EEM as well as FXI and all those emerging markets. As we started the halftime report, saw a news headline come out here, Matt. Trump is ready to dial up another 267 billion worth of Chinese tariffs on imports.
He also said the next target's Japan, and it's just going to get worse, especially now that Woodward has his book out there, and the New York op-ed piece basically said he's being controlled. It's just going to get worse. In fact, I don't know what's worse, the White House right now or Elon Musk house. And they're both pretty bad right now.
Well, no, it's in the Joe Rogan podcast studio. Get it right.
They all need to go to Joe Rogan. Every one of them. Go to Joe Rogan. He'll set you straight. He'll get you high and set you straight.
Well, c'est la vie. I mean, we'll talk about Elon Musk.
We'll talk about Elon when we have stocks in the news, but that's what I'm
bring it up. Let's get into stocks right now. Bring up TSLA. Now, actually, quick look at crude oil. We have to look at that one every day. We don't have to look at the VIX, every day, just when it actually tells a signal. But crude oil is on a pullback, Matt. We got rig counts coming out here in 3 minutes, could create some volatility. For swinging position trades, I don't let that economic kind of data affect me. The actual EIA number, that is the weekly one, I do kind of hedge into it.
That's what this was right here.
Crude. It's bearish. It's in the middle of the range. Cash flow still, right? Is what we've got.
I think it's cash flow still. However, I am willing to come off that, Tim. A lot of times, obviously, this was the 200-day moving average bounce, double top here. But if you get a bounce off 67 right here, confirmation above 68, a short term, bull call spread wouldn't upset me no more.
Yeah.
I still like a breakout more of $70 at this point. And again, I'm going to tell you right now, if we break out of 70 in the next 2 weeks, I'm going to buy that. But there's a big difference between breaking out of 70 after this run and breaking out of 70 after this run. Those are two widely different things.
I agree. I'm neutral on crude oil until otherwise noted. Obviously,
I'm neutral too,
and sitting in the middle of the range. Let's move on to stocks in the news here, Matt. You mentioned Tesla, and Tesla's down like 6.5%. Tesla is a beloved Tackle 25 stock that
it's lost its beloved status. When you lie and manipulate the market, and then try to cover up your crimes. No, you're not.
Elon Musk went on to a webcast, podcast, live show on YouTube and started smoking pot, Matt. He's a billionaire, so I guess he can do whatever the hell he wants.
I don't have problems with him smoking weed.
I have no problem with the behavior, but as a CEO of a company that's in turmoil the last year.
Oh, if I was the board of directors, I'd fire him.
I'd be pissed, right? I mean, come on. What are you doing? I mean, that's not leadership. That's not what your creditors need to see. That's not what... Listen,
you're not Dave Chappelle. Okay. You're Elon Musk. You're the tech billionaire inventor of everything. You're supposed to save the world, Elon. That's what you're supposed to do. Elon, your job is simple. Save the world. That's your job. Okay. So go do your job. Elon Musk needs to have Bill Belichick come into his board of directors for one session and do your job, Elon. That's what needs to happen. Somebody needs to talk some sense into him. I said this at 320. I said this at 300. I'm going to say it now. Who's buying this?
Well, I don't think anybody's buying it besides probably automated trading systems through the volatility. They're probably buying and selling through market maker stuff.
There's so much fire here. There's so much fire.
You're going to get fanboys that would buy anything if they love a company. Obviously, there's nothing wrong with that mindset.
Oh, I'm sure the fanboys are touting how amazing it is that Elon feels great that he's smoking weed. They'll turn anything around when it comes to Elon Musk. But what about Wall Street institutions here who are dumping this stock? What about the short sellers that are celebrating? And if you break this support level at 250, Tim, watch out. Okay, since the infamous Funding Secure tweet, which was massive stock manipulation, and I hope he wins that court case. Since that tweet, Tesla has lost 1/3 of its market cap, Tim.
Well, yeah, absolutely. And there's been bi-directional opportunities for a long time. 2 weeks ago, I'm doing the options report this weekend for tackle trading, and I can guarantee Tesla will be on that option report
Could
again.
be a strangle.
But I'm going to tell you what it is. It's going to be a bi-directional trade. And 2 weeks ago, when it was sitting at 320, Matt, and it was on a bear retracement, I didn't have a directional call, but I had a bi-directional call.
You've been very clear about that.
Here's the thing about trading, guys. If you have an edge, you can build a strategy that can profit. We don't have to know whether or not Tesla's going to go back to 350 or not. We don't have to know that. We just have to have an edge in the market. We have to have a strategy to apply to that edge in the market. And I think anybody with common sense can look at Tesla and say that stock's crazy. It's cray. There's no doubt about it. And it's going to bear rally back to 320, or it's going to crash and sell. It's not going to sit at 260 for the next month. I can promise you that.
Tim, no. Okay, so let's play the what's more likely game here, right? Yep. Okay, so Tim, what's more likely? You got two options, okay? That Tesla over the next month stays around 260, okay? 265, 255, 270 to 50, okay? Or that Tesla either goes to 320 or to 200.
That's a tough call.
It is. I gave you a big range for a reason. I also gave you a month though. Okay. Mind you, in a week and a half, it went from 320 to 260.
Dude, okay? A $60 move, even on Tesla, is still a 22% price move in 1 month.
Okay, that's fine. But in the last 3 months, Tim,
you're not setting a good line. 1, 2, 3, 4, it's like 5. Asking me if the Bears are going to win by 20 points. Hold on. Let me get a real line.
Well,
let's negotiate the line. 30-day volatility projection. Actually, the market's got a 44-point move. You're not that far off, Matt, from 60. 44 would be, the line would be 306.
Go 310, 210. I'll give. Listen, you give
it's
me.
It's more likely it exceeds the volatility.
Okay, you give me 50 points.
That stock, and obviously we don't know, but I would expect it to either be at 310 or 210 at some point in the next month.
Point in the next month. It's got to exceed that, right?
Yeah.
Okay. Now, I shouldn't say it's got to, because obviously it doesn't have to. But Tim, in the last month, okay, from this pivot to here, that's a 60-point movement. From this pivot to this pivot, Tim, that is a 93-point movement. From this pivot to, and we're all talking, these are weeks. These aren't months, Tim. This happens in a week. It goes from 285 to 385, a 100-point movement. You have the same type movement here, the same type movement here. In the last 4 months, this has done this 1, 2, 3, 4, 5 times. And so there's a reason the market expects 44 points. I'm saying it's going to go more. I think a long straddle, a long strangle works out on Tesla.
I agree. I might even look at a Debicon. I don't like the inverted fly right now. I have to look at the numbers, but I like it. I've been playing Tesla bi-directional.
There is a really good bi-directional play on Tesla right now.
I agree. And if you're
mind you, Tim, I have no clue where Tesla's going. I have no clue.
No, the opinion is we don't know, but we believe it's going to go.
Yeah.
Right. It is.
It would not shock me at 200, and it wouldn't shock me at 340. Nothing on Tesla would shock me right now.
Yeah, it's going to be on a volatility list. There's no doubt about it. Here's the thing about when stocks hit news like this, they've been lucky to hold long-term support, Matt. I believe Tesla's pain could be a lot worse if you think about it.
Too.
If you pull that back to a weekly chart, this company is operating on a negative PE ratio. They don't make money. I've been the biggest Tesla fanboy for a very, very long time. Don't get me wrong, but Elon better get his act together, quite frankly. If he is going to lead this company into the future, they have to actually hit targets, production, and you have to lead.
He could bury this company.
I agree with that.
Okay, and I hate saying that, but he could bury this company. He is completely off his rocker. He has no control. He's smoking weed in the day and pumping Ambien at night, and he's talking about it while he's high on a Joe Rogan podcast. He's sending out market manipulation tweets just to harm short sellers. He's got the SEC just staring at him right now. He's got multiple lawsuits hitting him right now, and he's obviously unhinged, right? And I say that as a man who says, yes, Elon, your job is to save the damn world. So go save the world.
Save the cheerleaders, save the world.
Save the cheerleaders, save mankind. Let's do this. Let's go hero on this. You thought I wasn't going to hit a heroes? Come on.
I enjoyed that show back in the day.
It was a good show. It was a good show.
For sure. All right, let's get into some other stocks here today. Now we got a bunch of picks that we're interested in.
Just very quickly, Tim, 2 on earnings. You looked at it yesterday. AVGO, that's Broadcom blew it out of the water. Really positive response. I said it yesterday. I maintain it today. There was no buy side opportunity for me on a break up. If it would have broke down out of 200, that might have been a shorting opportunity, but I don't personally see any opportunity here. FIVE, this is 5, FIVE. 5, this is a company that just up. You know, earnings gap runs. Earnings gap, a little bit of weakness, expect a little bit of a pullback, a la Google and what was the other one? No, Nike and Walmart and all those. PanW.
Give me PanW. Palo Alto Networks, we mentioned it yesterday as well. And Matt,
that's a potential breakout candidate, but it's got to close above the level.
Yeah, for sure. A lot of earnings roundup.
So very quickly, Tim, on 5, I'm looking for a retracement similar to Walmart, Nike, that type of thing. On PANW, trade Palo Alto more than I do, but I do like a close above these overhead resistance zones at 232, 233 in that range. That could be a potential buying opportunity there as well.
I'll tell you another one I like from 2 days ago is DocuSign, Matt, on earnings. And I don't mind it when a stock gaps up or down. And gaps don't bother me. You know, it's the behavior after the gap.
You know, the gap.
Gapping into support, I would be interested in some action here from here. I don't have any position on this. I don't have any thought on this yet. I would like an upside move, you know, because I like the trend that was developing there for a bit. It's had some nice runs there in DocuSign, you know, 55 to 70 in that pay range, Matt. It's got volatility too.
I'm shorting it at 62.5.
62.5. Gap fill would short it. We're sitting at 58 right now.
I see your signal here. It's gapping down in the 50-day moving average. A close above 60. I see slowing momentum and trend. I don't know. I don't have a good read on it. I was kidding about that. I'm shorting it at 62.5. I don't have a good read on it.
Yeah, but there's a lot of really interesting ones from the week. Next week, not quite as much, but then we're going to have a little bit more activity as we move through the month. Yep. Let's talk about some of the setups that you had found here today, Matt. Quite a few stocks I saw on your list.
Oh, yeah, and a lot of them are going to go on the scouting reports there. One stock I do want to talk about is ERI here, Tim. And the reason I want to bring this up is I was sitting with one of my mentor students yesterday, a young man by the name of John, and he's going to be a real good trader. And we were working on bullish retracement setups, right? Mm-hmm. And we were looking at El Dorado Resorts. We spent an hour together yesterday, and I basically walked him through with, okay, the market's kind of coming into this support level. This is where we're going to start looking for stocks. I taught him how to scan for bullish retracements. He found a list of 7 or 8 different stocks, and we were looking at them. And he asked me a question. He said, you know, Matt, at what point is it no longer a retracement? Okay. At what point are you no longer looking at this as a potential buying zone? And I said to him, I said, John, you got to realize that there are some things that are objective in the market and there's some things that are subjective in the market. Your technical ability is both objective and subjective. Where you identify support is where you identify that retracement. And so I was walking him through with all these different ways of how to identify support from prior pivots to moving averages to Fibonacci retracements to significant whole numbers to trend lines. And I said, John, the thing you got to realize is it doesn't have to just come into one support zone. There's multiple support zones, and you got to realize there's kind of this overall range that I'm willing to buy this at. So I'm going to look at ERI on this because it's a little easier for me to draw lines that, you know, you can teach from. Mm-hmm. So here we go with ERI right here. And I'm just going to look at just kind of this current information right there. All right. So here's the RI. It's kind of forming that retracement here. And obviously we were looking at it on today's date right there. So I said, okay, John, if you're looking at, and I'm going to draw some lines here. So just give me a second.
Mm-hmm.
Let's put that 3. Let's just go to black lines. And there we go. Okay. So here's your previous level of resistance right there. That could be a support zone. Here's your 20-day moving average. That can be a support zone. Here is your 50-day moving average. That can be a support zone. Here's $45. That is a minor significant whole number. I know that's kind of a weird way to phrase that, minor significant, but I don't know a better way to phrase it. So it's a less significant, but still significant, whole number, 45. That can be a support zone. If I draw my Fibonacci's, okay, if I draw my Fibonacci retracement zone coming from the low to the high here, 38%, 50%, 68%, all of that can be a support zone. So what you have to understand when these things are coming back down into support, Tim, and now I'm going to draw a box, and we'll put the box. Let's go magenta. That sounds good. Okay. So let's do magenta. That's great. So here, this is your support zone that you could find from here all the way down to there. That's your support area that this can drive down into, and you're still ready to buy it at any one of those levels. And so what I was talking to him about is, okay, so you see how this one's coming down into that 50-day moving, the 50% retracement. If it pivots at that point, you're looking to buy. If it comes down to 45 and it pivots at 45, you're ready to buy. If it comes all the way down to the 50-day moving average at 44 and pivots at 44, you're ready to buy. It doesn't have to be one level. These retracements have these big, big zones. And then he asked me, so, okay, but at what point are you no longer willing to buy? And let me kind of remove my lines here. And I said to him, okay, at what point am I no longer willing to buy is based on the Fibonacci. And when I'm looking at this, you have these percentage, 38, 50%, 61%, 75%. If the market ever comes, and this is kind of the parameters I was teaching my student, if the market ever comes underneath that 61.8% into the 75%, that is no longer a retracement. That means it is retraced too far for it to be a standard bullish retracement. And so I put those parameters in play. So as you can see, this stock is coming down into that 50% retracement here. It's slowing its momentum, upward moving in price on top of that. That would be a pretty good buying opportunity, in my opinion. In comparison, let me look at another one called W Day. W Day right here, real positive momentum, Tim. Okay, looks like it's a potential pivot right here. I'm looking to buy that. It's in the bull zone. But once again, looking at your drawing here, you got to understand the range of support here. That's your old resistance zone. It certainly could come back down into that level. You're still in the bull zone here. You got your moving averages right there. And looking at your Fibonacci here, from the low to the high, okay, you're sitting right at that 38.2% retracement. That's a potential pivot to the upside. But if it fails, I'm looking at it to here. And if it fails that, I'm looking at it here. And then if it ever breaks there, then I'm out. So what Fibonacci can help you do, Tim, is from a retracement perspective, is understand the zones of support of where a stock can come into that you're willing to hit it. And number two, at what point is this stock no longer in a retracement? And in my estimation, it's when it crosses the 61.8, gets underneath the 50-day moving average, and approaches a 75% retracement. At that point, this is no longer a retracement. And I hope you guys learned something from that little teaching segment. And if you did, give us a like and a share.
Dude, I love it. First of all, the nature of a market, nature of a trader is we have the information we have in front of us today. Now we have to adjust and develop. Whatever is happening, that's our job, is to adjust to it and develop. We don't know when the breakout's going to happen. We don't know when the pullback's going to finish. We just have to react to it when it does. A couple of really good picks right there. I like them. We've got a few other stocks on the list here, Matt, that I do want to talk about today, and a few other sectors as well. Take a look at Micron for a second. We've been looking at Micron all week. Just a quick update on this one. Micron, probably a profit-taking opportunity. You know, whether you did take profit yesterday or not, I did not yesterday. That doji candle now kind of
a little hesitant, but as long as it stays under 46, Tim, I think you're still golden.
Yeah, Eli Lilly, LLY, Matt. This is my pick of the day. This was on the
It's our last pick, T.
This was on the option report last week, and it was a high base setup. It's showing relative strength. It's in the healthcare sector. Breakout. It's a beautiful breakout.
That's a confirmed breakout.
Yeah. And on
in
a
sector that we talked about, bullish. Yep.
Yeah, I like it.
No brainer.
And it's a good reminder to everybody out there that your reports should build your watch list, not just for the Monday morning, you know. No. And that here in a couple hours, we're going to be meeting with our team after the bell and getting ready for our weekend reports. In my opinion, it's the most valuable thing in tackle trading if you're an active trader.
By far.
There are other things that are amazing, like the shows and the webinars. I love everything we do. But if you're an active trader with skin in the game and you actually, you know, are trading.
As a trader, it is the most important thing as a trader.
I agree with that. All right. Very good. Wonderful show here today, guys. You know, the halftime report presented by Tackle Trading. Obviously, come and join us. If you're not currently a member at Tackle Trading, we always offer everybody 15 days.
Hey, what, those scouting reports this week is going to pay for it.
Yeah, I agree. And magenta, Matt, you struck a chord with this magenta talk.
What's wrong with magenta? Magenta's a great color.
Listen, there's a lot of things magenta? I know. I don't know all the color codes. I have daughters though. They all tell me. Is
magenta pink?
Yeah, I think it's pink.
It's pink, right? It's got to be pink. It's not like a purplish. It's more like a pinkish. I'll rock the pink.
Magenta pink.
I need to listen to Pink right now. I like Pink. Pink's good.
Pink Floyd. I don't know.
I wasn't talking Pink Floyd. I was talking Pink, like the you know, what is she, a pop like star? Is that how it works?
I'm not doing this.
You're not doing this. oh, guys. Okay, send us out.
I will say this.
Survivor Guide, Tim.
Well, there's a recording and, you know, of the Bear Market Survival Guide webinar that we put on Wednesday. It's actually on our channel. You can go find it and watch it just right on our YouTube channel. And if you've purchased Bear Market Survival Guide, great. We love to have you on that team. If you've not, there is still a discount window until next Wednesday, I believe.
We're also doing an onboarding session live with all the new members of Bear Market Survival Guide on Monday. We'll be sending you an email for that invite on Sunday, I believe, Tim.
Yeah, that's right.
On Sunday. So we'll be meeting. Tyler Craig will be there walking you through, you know, what his expectations for you are from an education perspective. Also, obviously setting up the calendar for the first mastermind group, which starts in a week and a half from now. So guys, you still have a chance to be a part of that Bear Market Survival Guide team. I strongly recommend it. That is going to be an amazing system. All of this stuff, guys. I mean, we're talking $495 to be a part of a team for the next 2 years going through a bear market. If that doesn't pay for itself, then you're not making any trades. That's a no-brainer to me. Becoming a pro member of Tackle Trading, becoming a member of the halftime crew, halftime team, you know, team tackle and whatnot, guys. It's going to be an absolutely fantastic next few weeks in the market. The scouting reports for this week are going to be on fire. I am so excited for that 2:00 meeting, Tim. Fired up.
Yeah, I'm fired up as well. I will say this: it is National Beer Day. I know you're not much of a beer.
Beer. Okay.
Yeah. Like,
I had a beer last night.
You'll drink a beer every now and then. You know.
I had beer last night.
What is your go-to beer? What do you like?
I usually look at somebody around the table and say, "What are you having?
What are you drinking?"
Like for example, you and I had an amazing opportunity to take our old legacy crew out to dinner last night, and we're sitting around I think we went to Texas Roadhouse, and you know, it was so great to see Big Cat Steve, Marquise, Bobby, Tracy, you know, Chris Couch. Who am I missing here? Sil was there. Jake, obviously, you know, up and comer stud out there. It was just so good. I mean, that was our road family for 4 or 5 years, Tim, right?
We missed you, Emily, by the way.
We miss you guys. You guys are the best. We love you. keep on killing it out there, guys. You guys got our support 100%. But, you know, I'm looking at Bobby and I'm like, hey, Bobby, what kind of beer is that? He's like, Cutthroat. I'm like, give me one of those. That's my style right there.
Yeah, no, I'm with you. You know, if you're a beer drinker, enjoy a beer, you know, later after the bell, after the day,
What
after
would
the
you
day is
recommend?
done.
A nice little porter,
It
Cutthroat.
depends. If you're not a beer fan, all the beer snobbery lately just probably is annoying. But if you're a beer guy, you know, I actually picked up a bottle of Anderson Valley Wild Turkey Bourbon Barrel Stout. For
When you went into 3 words, I didn't listen to the rest. So
it is thick, it is dark, it is rich, it is delicious, and
hold on.
I'll have that with dinner tonight.
What was that again? It was what?
It is thick, it is rich, it is dark, it is delicious.
Is it like a porter? That's
Yeah, it's a bourbon barrel stout. So a stout is like a dark.
okay. While you go Oak California uppity hippie on me here, I'm gonna call my coal mining father-in-law, and I'm gonna toast with a Bud Light. That's what I'm gonna do.
Fair enough.
Okay.
Nothing wrong with that. I do enjoy a good PBR as well. I'm very hipster that way. So, all right, guys, we are out. We're done. Halftime crew is done for the weekend. Look for those scouting reports over the weekend. We're going to be working the rest of the day on building.
Hey, Tim, Trading Justice newsletter. Get it out there.
It's incredible.
Got to read that newsletter.
Well, first of all, has anybody read that yet?
We just sent it. Did we send it today?
Yeah.
So I doubt it. For those of you who do not get the Trading Justice newsletter, you can come over here to Trading Justice. You can get this month's copy for free. You can join Tackle for a 15-day free trial. You can listen to the latest episode, all that jazz. If you have not listened to episode 284 with the Options Made Easy guru, Guy Cohen, you are missing out on that as well. We put out a whole lot of blogs out there as well, Tim, but you definitely want to sign up for the newsletter. We have not posted part 3, but if you have not gotten this, you can come over here to the blog. Here's part 2, system development. Part 1 is down here. This is system development part 3. It's my favorite of the 3-part series, Tim, and it's an amazing newsletter. We should charge for it. That's how good it is.
Well, you know, the thing about it is, we charge for stuff. You know, I got no problem with that. In fact, we probably should charge for more. We try to do our best to maintain, you know, a relationship with our clients where we're helping them. And there's no doubt about it. I'm very excited about these newsletter series, Matt. I have big plans for them. System development 1, 2, and 3 is a full book, in my opinion, that could be developed out.
Well, and it will be part of the new book for System Development 101 when we release that over there at Tackle Trading next month. So System Development 101, which is a 101 series for all of our Tackle Pro members, they will get access to that as a pro member. And obviously this will be the book along with it.
Well, and if you've not read System 1 and 2, like you've said, go back and read them. System 3, we'll get it up on the blog today. I know it was emailed out today, Matt. So pretty cool stuff.
Yeah, love it.
All right, guys, we're out. We got work to do. We'll see you guys on Monday in the halftime report. Great job, Cody. Great job, Matt.
Great job by you.
Great job, halftime crew as well.
We'll see you on Monday, guys.
Yeah, cheers.